Hello and welcome to the Sterling Podcast. I'm Julia Williams, your host. Now, today I'm joined by someone that helps a lot of business owners sleep at night, especially when it comes to tax returns. And I'm delighted to welcome Nathan McLaughlin from NHM Accountancy. Now, Nathan works with individuals, he works with sole trainers, small business owners, and he helps them make sense of the numbers. He helps them stay compliant and particularly helps them crucially around last minute, well, in fact, not last minute, self-assessment time, which people often leave till too late. So, Nathan, welcome. Thank you for joining me.
Thank you for having me, Julia. So my name is Nathan, as Julia has mentioned, from NHM Accounts, and it's a pleasure to be here today.
So look, Nathan, why don't you start off by telling us a little bit about your background and your role?
So I set NHM Accounts up back in 2013, where I was previously working for accounts practices. Experience included both in practice and in industry. And I quickly realized and decided that actually setting up on my own was the right thing for me. And that's purely because I felt that I could offer a better service for clients that I felt weren't quite getting that service from a massive organization, and they just became a number. So I wanted to move away from that slightly and make sure that clients felt like they had a better relationship with their accountant, because I think there's times gone by where people are scared of their accountants or afraid to say things to their accountants. And that's what I wanted to move away from back in 2013. And so I set the business up as a sole trader originally. And then, fast forward 13 years now, we're a really fast growing organization, which is great, but we still maintain the ethos that our clients come first, which is great, because that's what, we set the business up, or I set the business up back when, and that ethos hasn't changed. That's always at the forefront of our minds. My role now in today's business is the managing director, if you like, of NHM Accounts.
Brilliant. And so what sort of clients do you typically work with then, Nathan?
So we work with a variety of clients. We work with sole traders, small business owners, large business owners. And just to give you an example of some I can't give names for obvious reasons, but we work with small mechanics, for instance, that turn over £25,000. Equally, we work with big travel organisations that turn over £95 million.
Wow.
So there's a massive difference, if you like, between the clients that we work with, sole traders, large organisations, small SMEs, also just property owners. So people that are employed, but also need to fill out a tax return because they either own property, stocks, shares, pensions, retired people, just general people that want some advice sometimes in preparation for mortgages or retirement or immigration, moving abroad, all of those things, tax planning for the future, inheritance, setting up companies. So it's a wide range of people we work with.
So there's such a huge spectrum then. There's a wide spectrum of, different types of clients that you work with. What would you say that makes you different from other accountancy firms out there? Probably sets you apart a little bit.
I think sense of humor, probably. No, I'm joking. I think actually it's the approach, though. I think that's very, very apparent in the work that we do, is that a lot of our clients and feedback testimonials all say that we're approachable. And I think that's key in our industry, because one of the things that we typically get told when we're either engaging a client or having a general conversation, or we're out networking or whatever that may be, is that, gosh, the comment I get all the time is that you don't look or come across as an accountant. And I take it as a compliment. I don't know whether it's meant as a compliment, but I take it as a compliment purely because it puts people at ease. And I think that then you get the best out of people. And our job, we can't do what we do if people aren't open and honest and transparent with us. So I think that is hugely important above anything else, is just that transparency, that people can trust us.
You come across really as a company or as a firm that's really relationship based. I mean, you've talked to, about the trust, the transparency, which I think is really key, with a business owner and their accountant, they do need to kind of work hand in hand to get the best out of, business working together. I want to talk to you about something which happens every year. People often leave it to the last minute for some reason. Self-assessments. Why do people leave it so late?
I think there's a couple of reasons, and it's good that you brought it up. So the running joke with accountants is that our New Year's Eve is the 31st of January, not the 31st of December. New Year's Day is the 1st of February. Just purely because I think a lot of people, it's the misconception of once they file their tax return, they have to pay their tax. And I think that's why people leave it very last minute, because they're putting it off and putting it off and putting it off. And then D-Day comes, and a lot of the time, not always, but a lot of the time, people don't then have the funds saved up ready to pay the tax that's due. So I think that's partly it. Secondly is I think people just don't like doing it, don't like putting the numbers together, don't like organising things, don't like the conversations with their accountants. And it becomes a bit of a scary process. So people are apprehensive about completing the work that needs to be put in to get the self-assessments prepared. But I think the main reason is that people just don't want to pay the tax until last minute. And that is the biggest misconception that we see.
Would you say, are there any common mistakes that people, make when they do leave it to the last minute?
I think it becomes rushed. I think people then forget that even though we send checklists and things like that, and we'll always talk to our clients to make sure that they've dotted all the T's, dotted all the I's, crossed all the T's. So I think there's the forgetting of things, which whether is deliberate or not, I would never say that our clients are deliberate with what they choose to disclose or don't disclose. I think there's a lot of, and that's when you leave it very last minute, things do get forgotten, things get missed. Whether it's they've had some interest from a bank account that they forgot that they'd had some funds in, or whether it be that they've bought investment into another business, or they've bought an additional property, or they've started renting a property because they've moved in with a new partner or something like that. And I think that's then not having the time to discuss it in greater detail because it has been left last minute is probably the biggest problem really that we face. And just moving back onto the previous question, and just to sort of suggest to people that actually just by submitting your self-assessment early, it doesn't mean that you have to pay your tax any earlier. It actually gives you that time to be able to save some money month by month to then pay the tax, which is due on the 1st of January. You
Ah.
don't have to pay it as soon as you submit your tax return.
Actually, I think that's a really good point to highlight, because I do think you're right. A lot of people delay it because they think, oh my gosh, I've got to pay it, I've got to find the money. But actually, like you say, the earlier you do it, then at least and you can save some money towards it. Obviously, sometimes when people submit their self-assessment forms, things must go wrong. Have you got any horror stories that you've heard without naming names?
We've got some, yeah. There's a few. I think one that sort of springs to mind was probably a relatively recent one where we'd inherited the client from another firm because they hadn't been given the best advice, and they were claiming for things that probably shouldn't have claimed for, but the advice they were given was not brilliant. So it resulted in HMRC opening an investigation. It involved having to pay back a good chunk of money that they didn't have. So they came to us to review everything, to make sure that they'd included all the expenditure that they could, to make sure all the allowances that they'd claimed were accurate or weren't, and to basically redo 6 years worth of self-assessments for them, to then challenge HMRC on the figures that they'd come up with, to then demonstrate that it wasn't a deliberate mistake, because the fines can be quite, they can be astronomical when you're talking 30% charges and penalties and interest on top of that over the period of time. So challenging those with HMRC, people again don't like to do, because they haven't got any precedent themselves, whereas we've got so many cases that we come across that we can use. That was a bit of a horror story. It resulted in somebody that was turning over £23,000 a year, very low costs associated with the business, having to pay back about £16,000 worth of tax over the period of time because of tax penalties and interest, which obviously wouldn't have been affordable for that particular client. So we had to come up with a time to pay as well with HMRC, as well as challenge
Wow.
figures that they'd suggested our client should pay.
Wow, that is a horror story. Is it just fines that people need to worry about? Or, if they submit it too late, are there other risks that are involved as well?
So fines are the main one, really. You'll have a fixed penalty if it's a day late, up
Yeah.
to the first month, and then it goes up by £10 per day to a maximum of £900. After 6 months, there could be a further penalty of 5%, or £300, whichever's greater. HMRC will, depending on what tax is due, will decide whether it's 5% or a £300 additional penalty. And then there's additional penalties on top of that for late payments of 5% of the tax that remains unpaid for 30 days. They're at the anniversaries of the 30 days, 6 months and 12 months. And then interest is charged on any tax that should have been paid that hasn't been paid as well.
Wow.
But other than the fines and the penalties and the interest, it leaves a marker on your name. HMRC will probably never. They probably will never divulge this information and never say that that's what happens, but it does. You have a marker on your name, whether you're associated then with companies that are, you're a director or shareholder of, and especially with AI and making tax digital, that's only going to get worse. So leaving it last minute, getting penalties, if you become a serial penalty receiver, then your name will be flagged by HMRC and it will be internal for them. And don't be surprised if you get investigations for PAYE, VAT, limited company, and self-assessment if you're a serial sort of penalty
Yeah.
receiver.
Yeah. Wow. So get your self-assessments done on time.
Yeah.
um, what would you say to somebody who feels just totally overwhelmed, by their self-assessment?
I'd say find somebody that you can talk to about it. And again, it doesn't have to be an accountant. It could be other business owners in network circles, friends, family. Just have an open conversation. You don't need to necessarily talk figures, but just say, I've got a new business or I need to fill in self-assessment. Most people will say you don't forget to get it in by a certain time because you hear things over the radio, on TV. It's not a hidden deadline. People will come across it in their day-to-day life. Usually it'll be on the radio as an advert. I'm sure it will be on the TV. It will be in passing with communication. You'll have emails about it, texts about it. It'll be those sorts of things. But what I would encourage people to do is to speak to an accountant as well. We're not scary. Well, most of us aren't anyway. You can have a conversation. We're human at the end of the day. We can have the conversation with you. Get prepared for it. So that's just keeping your bank account separate. Don't run everything through your personal account. Have a business account separate so that it helps you as a business to run that business, to make sure that you're profitable, to make sure that you've got funds in the bank, save a little bit of tax, put some aside and, have a rainy day fund. But more importantly, most accountants will offer a 30-minute to an hour consultation free of charge. Just have that conversation. You don't have to go with the first accountant that you see. And also you could sign up to free newsletters. You can sign up to follow me on LinkedIn, for instance. You'll see
Oh,
that
yeah.
there's bits that we write about. There's the deadlines that we will encourage people to beat. So just by following some accountancy firms or just looking at newsletters, there's free things on the Chat GPT as well. They'll give you some information. I'm sure that everyone's using that these days. We're embracing it ourselves. But I think there's a lot of information that's out there. There's a lot of help out there. I think it's just trying to encourage people not to bury their heads and to be proactive with what you need to do.
It's so easy to do though. If there's something you don't want to do, it's so easy to bury your head and say, "Oh, I don't know, I don't understand." But like you say, there's no excuse. There's so much information out there. But actually, that's really good advice. Really, I haven't thought about that myself in terms of following certain people, getting the information, and they can sort of drip feed throughout the year, can't it?
Yeah.
What would you say to somebody, are there any sort of like, other than following other accountants, are there any other tips that, you know, small business owners or business owners can do throughout the year, particularly self-assessment, just to make things easier?
I think if people run a very basic Excel spreadsheet to start with, you can do that and have regular conversations. If you've engaged an accountant, don't be frightened to reach out, not just once a year. We touch base with our clients at least once a quarter to touch base and to see how our clients are getting on, to see if business is going well, to see if there's anything that we can help with, whether there's any tax saving, whether there's tax legislation changes, whether there's anything in, for instance, the budget, whether that's affected people, preparing people for the national minimum wage increases, any other tips that we can offer people, we try and do for our clients. So that's been proactive from our side, but also for our clients to listen to what's being said as well and to try and action it. And that's not, us dictating what needs to be done. We're trying to help our
Yeah.
clients and to make them be fully prepared for what's to come. And I know that sounds scary, but it's not. If you keep your own records, and it's good for yourself as a business owner to make sure you are profitable, to make sure business is going in the right direction, to see if you can cut any costs anywhere, to make yourself more profitable, to plan for the future. You could type into Google, tax saving tips and things like that. There's a lot out there, but don't. Again, always your first point of call, I would say, even with Google, even with LinkedIn and Facebook and Twitter and everything else, I think you should speak to your accountant and reach out. And if they're not getting back in touch with you or not giving you the information you need, then it's probably time to change accountants, because we as accountants should be proactive in what we do for our clients. And that's just, that's my personal belief and my strong belief as a company. That's what we do. And I would expect other accountants to do. They should be doing the same.
Just for clarity, when should somebody realistically be thinking about their self-assessment? Obviously, we know the 31st of January is out, but when should they realistically think about it?
I'd say the sooner the better. As soon as so your self-assessment, the earliest you can submit a self-assessment is the 6th of April. So, for instance, the 25-26 year is the 6th of April 2026, which is only around the corner when you think about it. So you could start looking at your accounts. I would say the sooner the better. And the reason I say that is you can then, if you get all the figures together, you have a summary of your figures. Then at that point, if you're profitable, rather than having another 9 months of potential negative trading or another 9 months of difficulty or not knowing what tax to pay and not knowing how much cash you need to have, the cash flow in the business needs to be. Whether going limited is a better option from a tax efficiency point of view, whether going back to employment is a possibility. It's not just all about being business owners. Sometimes it doesn't work. And it's better to know earlier than later that's the option, and to have that conversation with an accountant earlier and to get your figures together at the earliest possible opportunity is the best method. That's the best advice I can give, purely because look, we're looking at, January just gone. We're dealing with people's accounts that finished on the 5th of April, 2025. That's a long time ago. That information is out of date for current business owners. We like to look at, for example, some of our clients when their month finishes in January. Say we do monthly management accounts for a lot of clients. We like to get that information to them by the 10th of the following month. So 10 days. So that information is only 10 days old. Self-assessment, if you're leaving it till the 1st of January, is 9 months old. That's out of date information.
Before, so, some people obviously try and do it for themselves. Like, when should you start thinking about using an accountant?
I think it's always good to have an accountant, and this isn't me sort of pitching for extra work and saying
Yeah.
everyone should have an accountant, but I think it's not just about putting the figures together into a self-assessment and to submitting it. I think it's having that hand-holding process which accountants should be offering throughout the year. So if you've got a question about how to potentially buy a vehicle or get a vehicle, whether that's a lease, a HP, a PCP, or buying it outright, you want to be able to bounce that off somebody that is going to be giving you the best possible advice from a tax efficiency point of view at that particular time and is up to date with the legislation. So I think engaging as soon as you open a business would be my advice. I know it's not necessarily affordable sometimes, so it's just as and when the business can afford it, but certainly get that free consultation at the moment you set up a business. Have that conversation, because most accountants will offer the foundation advice for you to be able to then move forwards with your business.
And how can an accountant, save businesses money? Yeah, I know, you can save them time, but, can you help them save money as well?
Yeah, so I think there's a lot of expenditure that people don't necessarily realise they can claim for. So there'll be expenses, and that will be dependent on the business that you're operating, whether that's vehicle costs, mileage, tools and equipment, travel and subsistence, stationery, anything that you can think of. Some businesses can use as an expense, some can't. And whatever's And the rule is as long as it's 100% a business expense, you can use it. And every business is different. So whether you're a mechanic or all the way up to, a modeling agency or something along those lines, the expenditure is going to be different. So I think it's worth speaking to your accountant, because it's not a one size fits all with expenditure. There's not necessarily there are lists out there that HMRC will present, and they're accessible to people to see what expenses are usually claimable. But each business is different, and that's what we recognise, is each business is different. So you can claim expenditure to reduce the profits. That reduces the tax due. There's allowances that you can claim for. There'll be not just that. There's time spent as well, as you pointed out at the top of that question, Julia. Is if you're been pulled away from your business to be able to do your accounts and to put things together on a spreadsheet and to try and prepare your own accounts, that's taking you away from what you do best, and that's generating the sales, whether that's service-led or product-led. By taking that time out that an accountant could probably do a lot quicker, it's stopping you from earning money.
And do you have like a tax tip maybe for either a sole trader or a small business owner that you could share?
It's difficult because it depends on the business. But what I would say is anything that is business related, no matter how small, no matter how silly it might be, because as I say, every business is different. And we work with a lot of different businesses. Some we have to sign non-disclosures for because we work with some celebrity faces and everything else. There isn't a one size fits all. But what I would say is make sure if you think it is a business expense, speak to your accountant, have that conversation. Make sure you're speaking to an accountant at the earliest possible opportunity. Tell them what your business is. Tell them exactly what your business is, because sometimes people don't. Sometimes people are afraid or embarrassed about what their business is, which sounds silly. And again, it's looking at what that looks like, and whether that's, like I say, a modeling agency or, it's sometimes seen as, certain industries are sometimes seen as quite taboo, and actually have that open conversation with your accountant so that they know exactly what you do, so that we can advise you the best possible way and to claim all the expenditure that's available to you.
And the final question that I've got for you, what is one mistake that business owners do that you want them to stop immediately?
Leaving your self-assessments to the very last minute. Get prepared. Just get prepared. Speak to your accountant. Don't leave it last minute. As I say, we're human as well. So our workforce is human. We do need some sleep sometimes, which January is a difficult month. And that's not just from a selfish point of view, me saying get it in before that. I think it just helps you prepare for what tax is about to be due or payable or not due, and you get a rebate. That's also a nice thing to have. So if you get your tax return in earlier and you're due a rebate, surely that's nice to have before Christmas.
Yes, please. It doesn't happen very often, but yes, please. Well, thank you so much. It's been an absolute pleasure talking to you today. And for our listeners out there, if you want to find out more, then please do reach out to Nathan McLaughlin and also the NHM Accountancy. It's been wonderful. Thank you for the hints, tips, and all the other things you were talking about, Nathan. Thank you.
Thank you for having me.